It's time to get even more real, folks. There are a lot of life insurance agents out there who care more about their commissions than your financial future. And today I'm exposing the most common life insurance scams so you don't end up overpaying or stuck in the wrong kind of policy over the next 30 years. And let me just say one thing to you insurance agents. Here's the bottom line. You get recruited to come sell insurance. You're told to go to family and friends. When you go to family and friends, you get the highest commission possible. And it's easy because they want to buy a policy because you're family and you're friends. However, typically you don't learn how to do the business the right way where you can get as many appointments and give you a chance to learn how to create a marketing strategy around you. And as a result of it, when you're chasing commissions, instead of chasing a business model, what begins to happen is you have what is called commission breath, and the client out there thinks they're buying a policy that's a become your own bank policy that has a whole bunch of cash value in the early years, and it doesn't. So folks, I'm here to educate the agent as well as you, the purchaser of a life insurance policy, so you both know what to do going forward. So one of the 4 points I want to talk about is the set it and forget it mindset. And what agents do is they sell you a policy, and typically they'll spend 30, 60, 90 days calling you 4 or 5 times a month. Once you get the policy enforced, they then speak to you, if you're lucky, once every 6 months, and they disappear. Maybe they give you an annual review. There's real no strategy to tie the insurance into other assets that you have. And typically, unless you reach out to them, there's not a lot of updates. So just be mindful of that. And when you're going through the process with an agent, just say, hey, if I say yes at some point, what does it look like after I say yes? How often are we going to meet? Because, by the way, when you do that, you're going to hold them accountable to those future meetings after you bought the policy. Because listen, your life's going to change. So should your coverage. And this is where communication with your agent and your full financial team is real important. And what I mean by that, if your policy is older than 3 years, and really, and you'll know this just by looking at your emails and phone, and no one's looked at it over 3 years, you're probably overpaying, or maybe you're underprotected. But either one of those scenarios should be a real life conversation so you know what you got to do going forward. It's important that you really I dot and T cross all these different things. So let's get into number 2, which is overfunding. And listen, I love overfunding policies, but don't do it for the wrong reasons. Some agents push for massive premiums for commission versus overfunding and a baseline premium. There's a major difference there, folks, and it's important through education that you understand this. That may not be in your best benefit if it's done the wrong way. Now, proper funding works when it's paired with a strategy, not a sales tactic. Let me say it again, when it's paired with a strategy, not a sales tactic. So what does that mean? I'll give you a quick example. If someone's doing $2,000 a month as a baseline premium, and by the way, cash value is still building up if it's structured the right way, and now all of a sudden you're going to buy a rental piece of property. If the policy is designed properly, you could dump in, let's say, an extra $100,000, right? This would have to be properly designed, and then take that 100 out within 30 days, 20, if not 11 days, and put that as a down payment on a piece of real estate. That is a strategy that I'm talking about, right? So if you do it the right way, you'll get multiple use of each and every dollar. And just think of some questions you could ask the agent along the way when you get to the point where you're approved. It's going to be delivered. They're going to show you the illustration. You're allowed to say, okay, $2,000 a month, how much is going towards my cash value? How much is going towards the cost of insurance? And remember, if you ask an agent what is the internal rate of return, I want to be clear about this. Whole life is not apples and apples to something in the stock market, because you have to factor in the whole thing. In other words, if I'm going to compare whole life to an S&P and it's just a rate of return conversation, remember, the whole life is going to give you a smaller internal rate of return than what you would see in the S&P. However, you're going to get a death benefit, disability protection, and a one-for-one loan ability on your cash value. As far as the S&P, if it's an after-tax account, there's going to be fees. There's going to be taxes, lost opportunity costs, plus market volatility. And if you ever want to leverage something in the market, you could probably get 50% of whatever it is, versus when you want to leverage your cash value, you can get over 90%. So an apples to apples comparison is not just the internal, it's the external rate of return, using the insurance to buy real estate, picking up those rates of return, and then the eternal rate of return, using it to buy real estate, but now spending down your cash value, spending down your other assets, knowing the death benefit's going to replace it. So those are 3 rates of return that can make your world so much better if you ever want to compare it. But it's okay to ask the agent what the internal rate of return is. It's going to make him or her uncomfortable, but if they're well trained, it shouldn't, because they know how powerful the insurance is, and they know how great it is when you put it in the middle of all of your other assets. And by diversifying within and amongst asset classes, so many good things can happen in your world. So let's get into number 3, which is term insurance that you actually can't convert. Some of these cheap policies with no conversion option leave you stranded when you need permanent coverage later. So let me talk about this. Whenever we put together a policy, we do a cash flow analysis. We want to look at what is the monthly savings, and then within that number, we're going to come up with a death benefit. But inside that whole life, we're going to put a term chassis in there, which means even in our whole life structure, you'll have term in there that you can convert as time goes on within the first 5 years. That's an important feature to have and understand, because remember, when your policy has term insurance and the death benefit grows each year, it's only because of the whole life, not the term. So at some point, if that term falls off, your whole life death benefit may come down. The dividend and the cash value is still going to grow, but it's going to reset your death benefits. So just keep that in mind when you go through all this and get very educated on the micro distinctions so you can make great decisions. And as a reminder, when we're talking about term, and remember they expire at some point when the term is done, saving $10 a month so you could have a big death benefit is going to cost you millions of dollars later when that death benefit falls off and you can't use it in retirement. These are things that we could talk about on a private one-on-one conversation by clicking the link below. And I want you to know, when you do click the link, you are not obligated to buy anything with us. Allow us to take you through a cash flow analysis and put you in a place to make good decisions. With that being said, just understand the term whole life difference and how that impacts your money. Last but not least, let's get into number 4, which is hidden fees and surrender charges. Some policies lock up your money and hit you with fees if you want out early. So it's important you know the surrender schedule before you actually make that signature real. And if you can't, or if it can't be explained to you in 30 seconds or less, it's a red flag and you should take notice of it and take a step back and ask more questions. The biggest scam? I don't think so. Thinking every policy is the same. You need the right policy with the right strategy from the right team. Click the link below for a free Epic policy review consultation and make sure your insurance is working for you, not the agent's bonus. And if you like what I said, please like it, share it, tag someone who needs to hear this before they make a mistake that could cost them millions of dollars later on.